Yeah, good morning, Kevin Hickland. Just wanted to have a catch up with all of my clients and I suppose just give a general overview of where things are at with the industry, some of the changes which are going on, regulation changes which we've seen, and there's some major industry changes as well. And of course, what I do myself, the process that I go through, the advice process, and really what people really need in today's world as a sensible, affordable, and peace of mind risk protection portfolio. So, we'll spend the next few minutes and I trust you find what I'm about to say is both informative, interesting, and light. Well, you may have seen just recently the government, in conjunction with the Financial Markets Authority, have released a report relative to the banking and insurance industry. The first one, of course, was done in Australia, which saw advice of many changes which may well come about in Australia. Now, these changes, of course, in the mortgage market haven't yet affected New Zealand, but of course, because of our four big banks are owned by Australian banks, we may see some changes in that area. But as far as the risk protection, investment and advice process is concerned, Chris Whaiwhai, the Minister, is looking at a whole range of options now of some changes in around and the way that we work, so to speak, and the way how the industry works. And it's more about to give protection to the client, to give best advice to the client. As an industry itself, we welcome this review. We've got no illusions. Like in any industry, there is areas that always needs a bit of sprucing up or tidying up from time to time, but nothing to be frightened of. It's more about making sure that the consumer out there is well looked after, is getting the right advice, and that the product range which is available to the market is going to meet not just present day requirements, but requirements for the future. And the advice process that they're getting from people is compliant, that being the very important word. And we are seeing compliance changes, which will come in over the next couple of years. There's new regulatory requirements for people in the industry like myself. And even though I've been in the industry for 20 plus years, and I've been here at Apex for 20 years, I think it is, it still doesn't hurt it's right that there be compliance, that's for sure. And that's really what the overview of the industry is going through at present. Well, I think in some regards they'll see they will see compliant transparency around a lot of things. I think some of the requests that were made that came out of the Australian report and it also came out of the New Zealand report, it's right to say that our Minister, Chris Whaiwhai, is not as sort of fearful and as policeman-like as what we may well see in Australia, because there was some very, very adverse commentary, and rightly adverse commentary, of the actions which came out of Australia. We're not faced with that in New Zealand, but what the consumer, I think, will see is just a wee bit more transparency or compliance transparency around how things are done, how remuneration is framed, all that sort of thing. But really, it's for the consumer out there, it's business as usual, but with a far better process of advice and also with compliance built around it. And also what it's going to do, it's the same in any industry. There's people out there who, let's say their way of doing business or their product range adopts I'll call it a shortcut approach to business, and that's not good for the clients. That's just because, that's when you start to see things on programs like Fair Go and all those sorts of things relative to, charitable insurance claims, for example, is always one which crops to mind. And we've had recent claims here in New Zealand which we've seen, which have been high profile. So it's more about that sort of thing to make sure that those in the industry itself are very, very well, that they're benchmarked and that they're compliant, and those who work with those companies, the likes of the AIAs and the sovereigns and all the insurers out there, that they've got the confidence that the advice given to the clients is the right advice. The client knows what they're getting, and I suppose a layman way of putting it out there is that so there's no holes in the bucket. Well, we've seen major changes, and there's major changes underway at present. So, for example, AIA, they bought out the insurance. So in Australia, Sovereign, New Zealand's #1 insurer, Sovereign was owned by the ASB Bank, who was in turn owned by the CBA Bank, Commercial Bank of Australia. So the Commercial Bank of Australia and ASB have now divested their insurance industry interests, and they have sold that to AIA. Now that makes AIA, without any shadow of doubt, now they're moving the merging of everything now. They're moving the products together, personnel together, branding. There's a lot of things that are in fact going on. Now that's going to see an exceptionally, I think, an exciting opportunity for the market. So AIA will be, without any shadow of doubt, the largest insurer in New Zealand. And they're about to launch, it'll be May, June, the AIA Vitality Program, which is a client loyalty program, so to speak, within insurance. But it's all about health and well-being. It's encouraging clients to do better things and to maintain themselves in a better, healthier mind space and activity and all sorts of things. And what that does in return, it creates points or loyalty points for them, which has got incentives on it. So yes, it's a loyalty/incentive program, but it's built around health and well-being for the clients. Now that's good for the country, and it's good for the clients. Now AIA have got this program on in a number of countries around the world. It started in South Africa a number of years back. It's been in Australia now for 6 years, and it's going to come into New Zealand. So that's the first big upside for the market of the new AIA Sovereign, or the acquisition of Sovereign by AIA. We've also seen OnePath, which was owned by the ANZ Bank, and the ANZ Bank, they too have taken the same bank philosophy and divested now their insurance industry, and that's been bought by Cigna. And that change has come about, and that merged company is now all happening. Another recent announcement is that Fidelity have acted for quite some time now as virtually the master agent for NIB, and NIB being the health insurer, the second largest health insurer in New Zealand. So that contract is coming to an end in 12 months' time and won't be renewed. So NIB will no doubt be announcing shortly some new ways of how they're going to market their products through the broker network and other ways outside to the New Zealand market. But the major one, of course, is the AIA and Sovereign, or the AIA acquisition of Sovereign, because that's going to certainly, some of the things I spoke about before relative to the industry, that acquisition with the Vitality program will quell a lot of those possible grey areas, I suppose, because it's a program which straight away is about giving back to the client. Well, if we talk about risk, I suppose the most, it's interesting, isn't it, that virtually everybody out there insures their cars, as a case in point. But one's biggest asset really is your income. But it's only 20% of New Zealand, or just over 20% of New Zealanders, who actually insure their income. And the question I pose is that if all of a sudden your income was to cease through illness and or accident, what's the effect it's going to have on your whole financial management inside your family, with your mortgage, education, children, putting food on the table, all that sort of thing? Because the other thing is that the average New Zealander, and these are published figures, the average New Zealander can only really survive financially for about 6 to 8 weeks when something adverse goes wrong. So first thing is, everyone has life insurance, although New Zealand is grossly underinsured, and there's stats out there which certainly highlight that figure. So I suppose quickly you could say, well, if you've got a mortgage and you've got a family, of course you need to have life insurance, because if something is to happen, God forbid, if you were to pass away, get a total and permanent disability, have a terminal illness, where does that leave your family? Where does that leave your business partners? Where does that leave you with your financial management with Mr. Westpac or Mr. BNZ or Mr. ASB, who you've got your mortgage with? And it's just, if you look at it this way, that you can have a risk portfolio that's going to protect your family, your income, all aspects, for, say, 2 cups of coffee a day. Now, if people view that as expensive, in my view, they don't have a great value or what I call fiscal responsibility back to the most important things in their life, which is, their income, their family, and their bricks and mortar. So I say to people, and business owners as well, I've had cases with business owners as a case in point when they haven't had share purchase cover to protect the shareholders and the value of the business, and the shareholders passed away. I can tell you that it happens that shareholders have had to sell their houses to be able to pass the funds back to the deceased estate for the shares to be transferred back to the other person. Now, it's not about trying to sell insurance. There's one thing I don't do is sell insurance. Don't believe in selling insurance. I talk about risk advice. What's good for you, what's good for your family, what's good for your business. And it's about the what if question. What if this was to happen? Where would you be left? What would the financial consequences be? How would your children's schooling, for example, continue? Just if you'd have a heart attack tomorrow, and when you remember the number, if we consider that, 80-odd% of deaths in New Zealand are relative to heart, cancer, stroke, it's pretty obvious what one needs to do. Now, I'll be the first to admit that when you get up in the latter years, the mature years like myself, well, your actual requirements are different. But when you're in that bracket between, say, 25 and 45, 50, and you've got the responsibilities of a family, a mortgage, a business, children, education, health, well-being, creating wealth, it's not about selling insurance, it's about protecting you, your assets, your family, your income. And that's how I see the industry, that's what I see my role. Yeah, I had a recent experience with a young lady in Christchurch, 3 children, and I say young children, all below the age of 8 or 9, and she worked in a job herself, in a sort of management role. Husband works as well, and got struck down with the breast cancer, the word none of us like to hear, especially for women, we don't like to hear it. And in 2016, I'd met with them, and I'd promoted the idea to them about having the Sovereign Progressive Care cover, trauma cover, because it's a unique cover by Sovereign for illnesses and etc., serious illness. Well, it doesn't have to be a serious illness, really. What it does is it's a severity-based trauma cover, and it pays out based upon the severity of what the illness is, etc. In this particular case, it paid out to this family an amount of monies, which has enabled them to just breathe again. It's given them, in the email the client sent to me, it's given them a financial safety valve, which has enabled them to carry on with things, because life changes. The poor lady's going through chemo and is unable to work the same number of hours as what she was working, and it's all about the family stress that it creates as well as the worry that you've got, obviously, the medical worry about the breast cancer. So what it's enabled this lady to do, and she endorsed that in an email to me recently, is it's just been a godsend, so to speak. And she was thankful in her email to me, and it's in my latest newsletter, in fact. She's thankful to me that the advice that, not that I sold them a product, and I'll go back to that point again, I didn't sell them any insurance. I gave them some risk advice about what if this was to happen, what would you do? Well, two and a bit years later, it actually did happen. And they're protected. Their family's safe, they've got a roof over their head. And sure, they're not smiling because of the health adversity which is there, but they certainly feel significantly better because they've got funds available now to be able to do a few things. What I say to people out there now is, I suppose really in closing of this, is to, look, please don't put your insurance requirements in file 13. Talk about them. talk around the kitchen table, talk around the dinner table, over a barbecue, whatever, about, and don't really talk about the insurance aspect of it. Talk about what would happen, how would we be placed if this was to happen. If we've got a business, for example, and it's starting to grow, successfully grow, and you've taken this business from a starting embryonic business to, we read about them all the time, to a business which is now, say, worth $10 million, and you've got 3 shareholders, and you were to pass away as one of those shareholders, or somebody of your shareholders was to pass away, and the company is valued at, say, $6 million, where would you find the $2 million to pay out that shareholder's estate of their value, their share, ratio share of the business, so that you and your other living partner, the shares could transfer to you? Where would you find that $2 million? Not from the bank, not from your back pocket. Not many people have got $2 million saved. But that little quick example is reality. And that bank manager down the road, who has always been so nice to you, will all of a sudden be knocking at your door saying, well, Mr. So-and-so is no longer with us now, and we need to sort this out. How are we going to do that? And having share purchase cover as a case in point will do that. If you're Mr. and Mrs. Jones at home and you've got a mortgage of $500,000 and you're earning $80,000 a year, you ask yourself then the what if this was to happen scenario. What would you do? So I pose to you this question: would you not, for the sake of, let's say, $10 a day, protect your loved ones, your income, the value of your property, and their future well-being? So the question that I put out there to families, business owners, think about it. And look, just, you can come and talk to me. My contact details are there on this video, etc. Just contact me and talk about it. What can we do? You may well have cover in place now. Is it the right cover? Have you reviewed your portfolio recently? What do we need to do? That's what I'm here for. That's what I specialise in. That's what I've done for 20 odd years, and I intend to do. Although the years are climbing up, I still intend to be doing it for a few more years yet. So thanks very much for your time. I hope you found this video, discussion, whatever you want to call it, informative, interesting, thought-provoking, and I look forward to hearing from you.